while we are in the session, and for all the attendees with questions, we will have a Q&A session at the end of the presentation. If you can key in your questions on the WebEx chat box at the top right-hand corner and send it to the host, we will be happy to take those questions and try to respond those questions sequentially. And if you are unable to respond or get to any of your questions due to constraints, time constraints, we will respond them separately over an email. Just to let you know that we'll be recording the session and we'll share this recorded version with all the attendees. For today's session, we have it's on going digital with your credit department. And as you all know, most credit departments are struggling with paper credit applications and time-consuming manual administrative tasks associated with credit onboarding process. So this is going to be a huge opportunity with two experienced speakers on the topics. We have with us Phyllis Saavedra. Phyllis is currently there as a Director of Order to Cash Solutions at Emagia Corporation, and she has been working in the field of credit and collections for over 20 years now, and over the years she has held several senior management roles in companies such as Cisco, Aspect, Novellus, SanDisk, and Saba Software. Additionally, she has extensive experience as a consultant in all areas of the order-to-cash lifecycle. We also have a guest speaker, Mark Edwards, who is the Managing Director at CreditSafe. And Mark has been a global credit professional with a demonstrated history of working in the business information industry. He's been very skilled in portfolio management, credit and risk solutions, customer service, sales, and business development. With this, I'll leave it to Phyllis, over to you to kind of go ahead and initiate the session, and then we'll get to Mark for introducing himself a little bit more detailed about himself.
Great. Thank you, Akshay. Thank you, everyone, for joining us today. We appreciate it. And just as a reminder to what Akshay said a little while ago, if you have any questions, if you would please submit them through chat. We will try and get to them probably at the end of the session. If not, we will get to them via email. Also, throughout the session, we will have 3 polling questions. I'll announce them. They'll come up. And if you would be so kind as to answer them on your screen, that would be great. So before we get started, I just want to take 1 or 2 minutes to share with you a little bit of information about our company, Emagia. Emagia has been around for about 14 years. Our specialty is delivering automation and efficiency processes within the order-to-cash life cycle. We provide software that covers everything from credit management to accounts receivable management, along with cash applications and deductions management. We work with companies of all sizes. As you can see on the top right, we have a marquee set of customers. We really specialize in several types of companies, people that are either trying to manage large volumes of transactions, those sort of beginning the automation process, and companies, large multinationals and global shared service centers. So, really a whole gamut of different customer types. Again, our solutions are available. They're multi-currency, multi-language. We've deployed them across the globe, and really we work to enhance a company's working capital metrics, improving things like cash flow and efficiencies throughout the organization. Emagia really has 2 types of solutions, and again, I'm just going to spend a minute or 2 on each and then get into the webinar. One is our receivables management suite, and as I mentioned, that is operating modules, so anything from credit management to cash application. We link to one or many ERPs, legacy systems, or spreadsheets, and give the user the ability to see a single view into their accounts receivable and then manage all those various processes. Everything comes with various business intelligence types reports. At the heart of all of our tools are robotic process automation, analytics, things like that, machine learning. We are, at our heart, an analytics company and a high-tech company. We are based in the Silicon Valley in Northern California, and we really strive to provide insights to our customers that are cutting edge and advanced technologies. The second solution that we have is kind of more relevant to today, and that is our tool called thecreditapplication.com. It's just like it sounds. It can be found on the website. It is an online credit application that we set up for you. Your customer can go then online and submit their credit applications, and then you get all the storage and things like that are available. And we'll talk a little bit more about that later, and we'll talk about what you should be looking for in a best practices type credit solution. Emagia really has 4 solution components. As I mentioned, we're trying to be on the cutting edge of technology. One is our global data platform, and that is for shared services. Again, we can pull in all of your AR data across the globe, across one or many ERPs or legacy systems, and give management and teams the ability to work in and report on global accounts receivable from a single viewing platform. I also mentioned our analytics. Analytics are at the heart of many of our tools. We use analytics to do anything from cash forecasting to DSO predictions and things like that. Very relevant to today's discussion on digital credit systems, we are very much using digital robots to perform many of our tasks. We have things like business license verification, all sorts of verifications and things like that, where the bots go out and check information. The kinds of things you and your credit department have been doing manually, we automate those for you. And then, of course, you know, order to cash best practices accelerator. We have prepackaged solutions that help you to improve all of the order to cash functions. Our goal ultimately is to provide value to your AR, order to cash, credit and collections department. And we're looking to get you the same things that you guys are looking for yourselves: improving cash flow, reducing DSO, minimizing bad debt, and certainly improving those working capital metrics. Our tools may be used at the operational level, they may be used by the individual teams, but they also will help you, as we like to say, to become a strategic partner to your executive team, being able to present insights to the business. So with that, that's enough of my sales pitch. Let's talk about what we're going to talk about today. Here's the agenda. The first thing we're going to talk about is why digital and why now. I'll go through a little bit on the 10 essentials that we believe, you know, we've spent some time thinking about this and we've come up with the 10 essentials for digital transformation of the credit processes. We'll talk about how the digital credit process can be made easy with thecreditapplication.com. Then Mark will join us and talk a little bit about digital credit reports with CreditSafe. CreditSafe is one of our partners. And then finally, I'll come back and talk very briefly about how you can get started on this digital revolution, how you can get started in the process, and ways that you can justify costs. So with that, why digital and why now? You know, Accenture wrote, digital technologies can strongly impact daily activities of order-to-cash departments. Companies need to be ready to focus their workforces toward more complex business issues that require judgment and decision-making, and therefore provide more value-add services to the enterprise and its customers. What does that mean? We are in an age of digital disruption. People are being asked to do more with less. We need to focus our departments on more thought-provocative work. The manual tasks, you know, of history should no longer be done. You should no longer be sending out invoices manually. You should no longer be mailing or faxing credit applications to your customers. It's a digital revolution, and the way to provide the best customer service to your customers is to get on board. So what are some of the impacts? So what are some of the positive impacts of going digital? First, and the thing that we're probably all most concerned about, is the customer experience. Digital is a new way of engaging your customers, helping your customers become more attuned to the decision-making that you as the credit department are making. You're improving how they're served. Things like online credit applications make it easier to onboard your customers. It makes it easier to secure all the information you need. It empowers the business to be able to serve more customers more easily and sort of simplify the process for them, which all adds up to a better experience and, of course, adds up to better customer satisfaction. Another impact is the business growth. For some, as we say here, for some executives, it's about technologies. It's about ways of doing business. Your company, the ultimate goal is growing. Whether you are growing organically or inorganically, going digital allows you to scale with the business. You don't necessarily have to add more people when you have more customers and you have more transaction volumes coming through. We're also living in a data-driven culture. We need to re-examine the ways we're doing business. We need to do things better and smarter and faster. We need to do things more simply. We also need to be able to access and utilize all the data that we have to make better, faster, and more proactive decisions. Digital credit allows you to do just that. It allows you to have all the information in one place. It allows you to make your credit decisions faster and certainly more proactive for things like credit reviews and annual reviews and things like that. And probably the most obvious is why go digital? To make your department more efficient. We all want to be more efficient in our operations. Automation frees you up from doing those repetitive manual tasks that many of us do. Within the order to cash department, you have a lot of roles that are repetitive, things like cash application, things like reviewing credit applications, sending out invoices, sending out statements. Automation allows you to be able to do more thought-provocative work and let automation do some of the more manual tasks. And it also gives you the ability as management to rethink how you can reassign your resources so that they can do, again, more value-added tasks. So why digital and why digital now? What you're seeing on the screen is some of the research foundations and news agencies. Everybody is talking about digital transformation. They're talking about why you should be doing it. For example, Gartner is saying that digital business currently accounts for only 18% of overall revenue, but they're predicting that it'll be 43% by the year 2020. According to Capgemini, companies that become digital enterprises can look forward to a 26% increase in profitability. So why digital? Why now? Because it's going to make you a more profitable, more efficient company. When we look at where we were 2 years ago, and we think about where we're going to be 2 years in the future, we're looking at what people were looking at in terms of process improvements. 2 years ago, digital transformation was at the bottom. It wasn't, people were looking at things like cost reduction and productivity of the businesses. These were the things at the forefront of companies' minds. The CFOs were thinking about, controllers were thinking about, boards of directors were thinking about. But as we are progressing and we see what's happening today and how we predict that things are going to be happening 2 years in the future, when we talk about process improvements, the real focus now is on digital transformation and looking at how you can digitalize the various processes within your business. So what are today's challenges? What do you face as an order to cash, as a credit and collections department? What are the kind of challenges that are sort of impeding your ability to necessarily take advantage of the digital age, of the digital processes? Well, number one is order to cash functions are in silos. Oftentimes you have cash application being handled by one part of the organization, credit management by another, and perhaps collections and deductions by another part of the organization. It means that there's not enough talking between the organizations. There's not enough synergies that are being found so that you can make the best use of your business. You also have diverse customers with diverse requirements. One customer may want an invoice this way, another customer, one may want it mailed, another may want it faxed, another may want it emailed. So you have to be able to look at what all of your customers are wanting and find a way to approach that in the most efficient way. And when you look at the way we've conventionally been approaching business and our business processes, especially in the credit and collections department, oftentimes the way we've been doing business provides poor customer service. For example, it may, credit applications coming in through a fax machine. That credit application may get lost. Then it's going to take a while to send out trade and bank references and then pull in information from third-party solutions. And then somebody has to sit down with a spreadsheet that they use for scoring. These things, it takes time then to onboard your customers. Your salespeople have got them very excited about your product. They want to bring them on board. Everybody's ready to go. But sometimes our processes stand in the way. We also, sort of similar to the processes being in silos, we haven't found an innovative, holistic approach to managing receivables. We need to understand that everything is integrated. Everything is integrated from that first credit application to getting paid by that customer, and then having that customer come back to the next sale. You want to make sure that we're looking towards a holistic approach to receivables. Also, many companies haven't really discussed their finance transformation roadmap. You need to find a way, hopefully from your CFO, your CEO on down, you're talking about how your company is going to address the future and how you're going to scale and how you're going to adopt these new technologies. And finally, too many errors and business halting processes. Anything that is done manually is subject to error. If you are credit scoring a customer manually, you might put in a wrong value or something like that. These things can lead to bad and poor decisions and certainly slow down the processes. So what sort of technologies, what are the digital technologies that are available to you in finance? The first would be digital transactions. Those are things like your forms, your invoices, how you're receiving payments, how your documents are being signed. All of these are I call that sort of your starter steps. Those are the easiest ways to begin the digital transformation journey. The next is mobile and web apps. Access to customers everywhere. If you're utilizing an online credit application, I recently was talking to a potential customer, and their end customers were farmers. They wanted farmers to be able to submit credit applications. Everybody now has an iPad, a cell phone, a smartphone, or a laptop or a PC. Nowadays, credit applications can be submitted from anywhere. You want to be able to take advantage of that. RPA, or robotic process automation, that allows you to, have bots that are able to do these repetitive processes. In our tool, we use it for things like business license verifications. We have a customer that is a winery. They use it in order to verify alcoholic beverage council licenses. It goes out every time a new application gets submitted. It goes and verifies the licenses and things like that. All these things that somebody used to have to type in a number and verify, all of these kinds of processes can be automated today. Analytics. Analytics is another great digital technology. It allows you to get predictive and prescriptive ways of managing your business. It's applying machine learning, complex algorithms in order to go out and, for example, predict when a customer is going to pay, predict their payment patterns and things like that. And finally, looking at digital applications as a service. You don't need IT for a lot of these processes anymore. Everything is stored on a cloud. You can store large amounts of data that is easily accessible, and in turn, you can use a lot of this data for what I talked about with the analytics, to get insights and things like that from your business. So I'm going to open up. Here's the first polling question, and hopefully my poll is going to work. Bear with me one second. Let's see if it opens up here. Okay, so the poll is now open. Do you currently have a digital credit automation project planned? A, yes, within 12 months. B, not sure when, but yes. C, you're not sure if you have one. And D, no. If you would be so kind as to go to the right of the screen, answer the questions. We have about a minute to do so. And I apologize, it looks like the poll is not starting. There we go. I'm sorry. Now the poll has started. Forgive me for that. All right. So it looks like, you know, we're pretty evenly spread out on here, kind of, you know, 22% with yes and no, and 11% yes but not sure, and 1%, excuse me, 11% not sure. And we'll have all these polls available. So I'm going to close this poll for you. Thank you for answering. And I'll move on to the next slide. So what I want to, you know, earlier I mentioned, you know, we've put a lot of thought into this. We're an online credit application tool. We've tried to think about, and this is based on what many of our customers have talked to us about, is what are the 10 essential elements of the credit automation or digital credit process. The first one we believe is online credit applications, and I'm going to talk to each one of these a little bit more in a second. The second would be digital signatures, digital reference checks, integration with third-party external credit agencies like my friends at CreditSafe, who will be talking in a little bit, custom credit scoring, a rules-based credit limit granting process, workflow approvals, periodic portfolio analysis, analytics and dashboards, and finally, digital document storage. So online credit application. What is an online credit application? Why do you need it? Really, it's an online form that your customers can use, takes away the paper. Your customer links to a site, they can go in, they can fill in all of the information that you need. It makes it very convenient, it makes it easier for them. As I mentioned, we have set up within a tool like ours, we've got bots that will go out and verify things for you. It's a very low cost, easy way to start the digital process. For those that ask me, you know, I'm out at a lot of credit organization meetings. People ask me often, where do I start? How do I begin the process? I think online credit applications is the best way to start the digital journey. It is one of the most cost-effective, easiest ways to start the journey. It allows you to automate a large portion of your onboarding process, and it's, like I said, it's a great way to start. Second digital essential would be a digital signature. I recently read that people were afraid to use online credit applications because they were concerned about the legality of digital signatures. Digital signatures now, there are two acts. There's the UETA, the Uniform Electronic Transactions Act, and the e-Sign Act. These have made digital signatures legal in all 50 states. Most countries now accept digital signatures. Keep in mind, a digital signature is a little different than an electronic signature. A digital signature, somebody actually signs. It increases the authenticity. It's legal. In the case of our tool, we use a digital signature and a CAPTCHA to verify that a robot hasn't signed the application. So the question of legality is no more, and it's a great way to legalize the whole thing as well as have it all stored online. Digital reference checks. What's a digital reference check? Simply put, when your customer submits their credit application, if they put in a good email address for a bank or trade reference, that bank or trade reference will receive the reference request in their email inbox. They can fill it in, they submit it back, and it attaches to your credit application. You no longer need to mail out trade references that get thrown in the trash or fax them and they get lost in the wrong department. They come back, it's simple, it's easy, and you can spend time on more impactful ways, processes within the business. And and oftentimes I get asked about bank references. We're finding more and more that the banks are willing to do this, especially when they're sent to the appropriate bank contact. Integrating with third-party credit reporting agencies. Mark will probably go into a lot more detail about CreditSafe later on. The way a solution should work is your tool should be linking to a third-party agency. Most of you have already signed up with companies like CreditSafe or Dun & Bradstreet or NACM's NTCR, and you want to be able to utilize this data. You want to be able to pull it in, take the fields that you're using either manually right now for credit scoring or to create some form of credit scoring, and automate that process of determining whether or not your customer is creditworthy or they're not. And you can use it, and any good digital system will have plenty of storage to save all these reports or save all the fields, and you can use them, over and over again. I talked a little bit about credit scoring. A digital solution should have custom credit scorecards. So you should be able to set up a scorecard that is relevant to your business, not to what the agency or not to what your online application tool says. So what's important to you? What types of information should you be pulling in? Is it length of time in business? Is it a certain score that the agency you're using you want to use to make it relevant? How long has somebody been in business? Do you want to pull in balance sheet or income statement information and check certain ratios? How do you want to do it? Credit scoring is also really great because if you fall under Sarbanes-Oxley guidance or any audit or process guidance, it allows you to replicate your processes over and over again in a reportable fashion that also has time and date stamps so that you can see what happened, and now you're judging all of your customers equally. And again, it's really great for audit processes. Rules-based credit decisions, so making decisions based on rules. For example, if you set up a rating system of 1 to 10 with your customers, everybody that gets between an 8 and a 10 on their scorecard could be considered a low-risk customer, and you can bring them on board instantly. No one else has to look at it. You can develop these processes so that maybe you're only looking at your medium and high-risk customers. You find a way to develop these rules that fits best for your business, automate what you can, and now you only have to touch the high-risk, high-touch customers, and it really simplifies and speeds up all of the onboarding of your customers. And oh, by the way, it does make salespeople a lot happier. Sales really, as we all know, sales doesn't want to spend time on applications. They want to get customers on board as quickly as they can and get them approved. And if they're not approved, they want to know why and try and fix it. Workflows. You want any solution that you're looking at to have workflow attached to it. Again, this is for SOX compliance. But say, for example, the credit application comes in, certain dollar amounts, needs to go to your controller, your CFO for approval. You want it to be automated. You don't want to have to go, I remember the days of walking credit applications around and going, sales was on me to get an order out, so I would physically walk the application that I would approve over to my manager and then over to the CFO, and we would have to do this sort of manual process. Workflow allows you to have an audit trail and, again, speeds it up and allows you, if you need escalations, to speed up the process. Reviews. Oftentimes you have a policy or a procedure in your company where you have to review somebody's credit every 6 months, every year. You want a solution that has an automated review. You want it to be able to automatically go back. You don't want to have to manually, or think about when your customers need reviews. You may just want to look at high-risk customers. Again, anything that will reduce the manual process. And with these automatic reviews, and if you're looking at your high-risk customers or your past due customers, it really helps you to reduce risk and does help you minimize bad debt. We've seen it time and time again. With updated credit information, you can really manage your AR portfolio much better. Next to last, dashboards and reporting. You want to find a solution that allows you to report on it, whether it's visual analytics like dashboards that have drill down capabilities so that you can manage to your KPIs, manage to your business metrics, or reporting. You want to be able to share the insights that you're getting from this automated system with management, with your team, so that you can share the exposure of your customers across the business. It's also great, the reporting, for using for your good customers, sharing with sales who they should be building relationships within the business. Look for a tool that allows you to have dashboard reporting, BI type reporting, or some sort of reporting so that you can manage to your KPIs and best practices. Finally, document storage. Document storage is the bane of every credit department's existence. I can't tell you how many companies I walk into, they still have aluminum files, file after file. Somebody needs to go find last year's credit application and they're looking through the CO filing cabinets. That is, to me, it's crazy. In this day and age, everything should be stored in the cloud. Everything should be accessible to you, and you should be able to pull this information if you want to get insights from it for analytics, if you want to store documents. Our system, for example, our credit application asks customers if they should be charged sales tax. If they say no, we require them to upload a resale certificate, storing things like resale certificates, storing documents that you require for onboarding. Any good solution you look at should have good document storage and safe document storage. So with that, I'm going to open up our next polling question. And bear with me. Number 2. Okay, I am opening the poll. What is your average time for credit application submission from submission to approval? Less than 24 hours, about 2 days, about 1 week, or greater than 1 week? So I'll give you all a second to answer that. So that's good. It looks like everybody's, about half the people are able to do so in about 24 hours. The other half of you should be looking at some sort of digital credit tool, because I think you can reduce it down to about 24 hours or less. All right. So just briefly, we talked about the 10 essential elements, and of course, just want to talk a little bit about our solution. And we like to say, one solution, everything that you need to get started. I talked about the 10 essential elements. Our tool has it. There are certainly other tools out there in the market that have it as well. Our tool integrates with people like CreditSafe and Dun & Bradstreet. We've already built the pre-built linkage so that if you are a CreditSafe or a Dun & Bradstreet subscriber, the information comes in easily. We have embedded bots and digital technology at the heart of our solution. It's also got an easily created template. Our template is very simple. It's your logo, it's your terms and conditions, everything. We are just simply the engine for your credit report. So think of it basically as putting your credit report, or your credit sheet, your credit application online and giving your customers access to it. We've got digital bank and trade references, storage. We are SOX compliant, and we certainly align with global credit and collections best practices. This just gives you a little view. One of the neat things about our tool, and I would hope with any tool that you guys are looking at, we let you determine which fields you are required. We have a red asterisk in our solution. Your customer can't get past that without filling it in. Look for a solution that makes sure that your customers are giving you all the information that you need and not allowing them to skip over fields that are going to require you to have to call them back or pull up information in the future. And, you know, what are the benefits, right? Happy sales reps, I mentioned that earlier. Sales reps are always going to be happier when you can get customers on board faster. The credit department is going to be happier. You're going to process things faster. People in the department now can manage more thought-provocative work. You can look at the high-risk accounts, make determinations on those customers that really deserve more time and need a more manual decision. Customers that get onboarded faster are happier. They tend to want it. Every survey we have seen shows that customers that, when they start the process, you're a new customer, your very first interaction after your salesperson is your credit department. If you have an easy experience with the credit department, whether it's bringing somebody on board or getting them approved fast, those customers want to come back time and time again. And finally, we all want to keep our executives happy, right? That's just a given. We've reduced risk, we've reduced bad debt write-offs. All of those kind of things tend to make your executives happier. So just some use cases, some examples. Some of you are probably wondering, is an online application good for me? Do I want to use it? I just showed a couple examples of customers that we have. One of our customers came to us, a wholesale electronic parts distributor. They just had a really high volume of applications. They had a lot of branch locations. People were coming in to submit applications. The applications were coming from a lot of different locations. We got them to a less than 1 day processing time. We're working with another customer. It's a big media company, a $1.6 billion revenue company. Right now, all their processes are manual. They are doing all of their scoring manually. They're pulling from 2 different agencies, one big reporting agency and another that is an industry specific. They wanted to automate the scoring. They wanted to be able to do it from multiple locations. And then this was a customer that came to us that wanted us to customize their landing page. Their customers, whether they were advertising agencies or direct advertisers, they wanted different things. So we were able to customize some things for them. And finally, another example is, I think I mentioned the winery earlier. This winery is growing. They keep acquiring new businesses. It's a small team. They can't hire any more people. They just needed to scale, and so we got them to 100% automation of all of their processes, including their license verification. So while I'm opening up the third poll, in a second we'll answer the poll, and then we're going to move on to Mark to talk a little bit about Credit Safe. So let me open the final poll. So on which tasks do credit analysts spend most of your time? Making sure the application is accurate, the data entry into a scoring sheet, credit limit approvals, or locating lost credit applications? Give you a second to answer that. And it looks like we're pretty mixed across the board. It seems to be a little bit in each category. Great, thank you for that. So before I pass to Mark, I think the question is, do I need digital technology? You want to ask yourself questions like, have you been asked to do more with less? Does your company have automation goals? Have you been given a goal this year to automate certain processes within your business? Are you growing, whether it's growth by additional sales or by acquisition? Do your customers seem unhappy with the processes that you have today? Are your salespeople complaining? And have you lost, do you find yourself dealing with a lot of lost paperwork? So how do I get started in the process? Pretty simply, you want to assess your current state. You want to look at what you've got today. Whoops, I apologize, just went back. Sorry about that. Look at what you've got today and see where you need to get to tomorrow. You want to look at your current ERP system, your current legacy system. What do you have and what's available? You should also look at establishing very, specific goals. What do you want to get to? Is it automating 100% of the process so you only manage some of your applications? How much of it do you want to, how much do you want to automate, and how much can you, take advantage of in this, current situation? You need to get executive and IT buy-in. Before you start, if you don't have the support of your management and the support of your IT team, I can tell you, you won't get very far in the process. Also, you want to look at the cost, and for that cost, you want to be able to develop an ROI. You want to be able to develop a business case and a return on investment. Every CFO is going to want you to show how you can pay for the solution. And finally, you want to develop a timeline. How long is it going to take? How much time do you have? And what sort of resources do you have? Justifying costs, as I mentioned, you want to be able to develop an ROI. You want to look at the cost of the tool versus how long it's going to take to implement versus what the actual cost and value to reducing processing times, to reducing risks, and how you're going to get savings from these new capabilities. When you go to your management, or if you are management, you want your team to come to you armed with data. You want them to be able to show you the ROI, show you how fast it's going to pay for yourself. You also want to look at some of the intangibles, things like customer satisfaction, the being able to scale your business, sales growth, things like that. Come prepared with various options, examples, and certainly talk to your peers. Talk to other companies that have implemented tools and come armed with success stories. So how do you go digital? You want to address the changing customers and marketplace demands. You want to be agile and responsive to the operating models. You want to look at streamlined processes. You want to look at reducing operating costs and working capital improvements. You want to be able to connect end-to-end processes and align functions with one goal in mind, and that's customer service. And this ties back to what I was talking about at the beginning, making sure that order-to-cash functions are not in silos and you're taking advantage of the synergies between the departments. And most importantly, you want to be able to incorporate the appropriate digital technologies today that include things like robotics and artificial intelligence and digital technologies. And with that, I am going to hand it over to Mark. And bear with me for 1 second. I will hand it over, and we will, 1 second. Mark, I apologize. It is not moving for me. Oops. Where did Mark go? Okay, Mark, I've passed the presentation to you.
Good morning, good afternoon, ladies and gentlemen. CreditSafe and Emagia have been working together on various products for some time. I was fortunate to meet with Vina, Emagia's CEO and founder, at this year's Credit Congress, NSAM Credit Congress in Texas. A few weeks ago, Phyllis and Akshay reached out to me and asked if I would share my thoughts on going digital in the credit department. Whilst this is becoming an increasing theme and question asked by many industry groups and business journalists, it's certainly got me thinking, what does this mean? How does this impact my industry? And how does this, more importantly, impact the people that my industry serves? Companies today are rushing headlong to become more digital. For the purpose of this discussion, I'm going to focus on the credit onboarding, but the principles apply throughout. So for me, it helps if we rephrase the question to, what is the future for the credit department? How can I utilize better technologies? What problems can we solve? How do we improve our current processes? How do we reduce the requirement for manual effort? Prior to going into this theme, I would like to give a very brief introduction to myself and CreditSafe. As I mentioned, my name is Mark Edwards. I'm the country manager for CreditSafe USA. I'm originally from a town in South Wales, United Kingdom, called Caerphilly. I've been with the CreditSafe Group for over 14 years. From 2004, the first few years of my career was spent employed as a salesperson, selling credit reports to interested parties. I progressed into selling financial products such as credit insurance and factoring with third-party partners such as Atradius. In 2009, I was recruited to start the collection of trade payment information for CreditSafe Group. This role included heading up the team responsible for collecting and processing trade payment information, as well as launching a flagship portfolio management tool called CreditSafe 3D. In September 2013, I was seconded to the US to assist in our data collection efforts. I was promoted to my current role of country manager in January 2016. Outside of my daily life, my daily job, should I say, I'm an avid reader, fanatic rugby player, and amateur cook. I would like to share some information on CreditSafe Group. CreditSafe are the global business intelligence experts. Each day, over 250,000 finance and sales professionals around the world leverage its company database to make more than 450,000 business decisions. Our database contains real-time information on 240 million companies in over 100 countries. Figure 1 details the countries highlighted in red where we can provide instant online access. For over 20 years, CreditSafe has been changing the way the business information is used. We are privately owned and independently minded. CreditSafe has expanded to countries all over Europe, America, and Asia, with plans to open more operations throughout the world. We're headquartered in the United Kingdom, with offices in Sweden, France, Ireland, Holland, Germany, Belgium, Italy, and our US headquarters are in Allentown, Pennsylvania, with a sales division out of Tempe, Arizona. We opened our latest venture in Japan in September 2016. Figure 2 details this progress in chronological order. We are the world's most used provider of online business information. In 2016, we delivered in excess of 110 million credit reports. The slide tracks the number of credit reports CreditSafe has delivered year on year. 2017, we're on track to deliver over 170 million credit reports. We're also the fastest growing provider of global company business information. Our revenue has grown by 102% since 2013, from 77 million euros to 156 million in 2017, with realistic growth plans to double by 2020. In this slide, we're able to see how CreditSafe has grown, looking at various factors such as the number of customers and the growth of number of employees. All our company credit reports will include the following: company identifying information such as company name, our SAFE number, which is a unique global identifier, address, company number, website, and industry codes. We offer company size attributes such as estimated number of employees and estimated sales. Trade payment data contributed by thousands of both customers and non-customers who have chosen to share their accounts receivable data with us. Officer and manager information, an easy to use and interpret credit score or rating with a suggested credit limit. Adverse legal information such as tax liens, bankruptcies, suits and judgments. We also offer corporate group structure as well as linkage data. Our proprietary credit score predicts the likelihood of bankruptcy or severe delinquency in the next 12 months. Our statistically backed rating and suggested credit limit algorithms factor in attributes such as demographics, adverse payment behavior, negative court information, financial statements where available, officer data, industry and geographical trends, as well as international group structure. It's worth pointing out, and as Phyllis alluded to earlier, our standard credit rating and limit model is designed for the mass market and is not industry specific or tailored to an individual company, although we do have custom scorecards. That is the background on myself and CreditSafe. Now I would like to share with you our insights on where we believe the industry is going. Research suggests that robotic, artificial intelligence and advances in technology will reduce the need for human resource by 50% in the next 50 years. The graph here details how we think this reduction may look. There's a great quote by Peter Thiel, the PayPal founder. Strong technology is like a cosmic lottery ticket. If we win, we get utopia. If we lose, Skynet substitutes us out of existence. Now, whilst I understand this quote may provoke a feeling of unease, and it was certainly not meant to do so, I'm not saying that in the next 50 years there will be no credit department, and in fact my belief is quite the opposite. In order to use our expertise when making a credit decision, the process the credit grantor will follow has not changed much in the 5,000 years since the concept of credit was born. This is the same for business to consumer and business to business. First, we want to confirm the existence of the person or entity requesting credit. Secondly, we want to understand the status of the person or entity requesting credit. When I started my role at CreditSafe in the days of dial-up, is that we were still faxing reports to customers. It amazes me to the number of customers that I visit that I have a prospect complete a paper application form. They will then send off for 2 references from the prospect suppliers and or their bank. They will go to a website service such as CreditSafe and print off that paper credit report. We'll make a subjective credit decision. This data is then manually entered into the CRM. Once approved, the documentation is stored in a physical filing cabinet. This process can take from a few days to a few weeks. And therein, obviously, lies our problem. The slide here details this process. Our research shows that over 90% of credit departments in the US adhere to this process or very similar. I'm going to deviate slightly. I'm sure we're all familiar with the company Uber. Most of us know Uber as a convenient, inexpensive taxi service. In fact, Uber is a technology company. Frustrated by not being able to hail a cab, its founders solved this problem by combining a series of application program interfaces, APIs. These interfaces included mapping and payment processing. This combined solution sent shockwaves through an age-old industry, dragging it into the digital age. So going back to the theme of going digital in the credit department, it is worth mentioning that as of July 2016, for the first time in our history, more credit decisions were made with credit data pulled via our API directly into external services and CRM than traditional web service and using the process we outlined earlier. The very fact that you guys are attending this webinar demonstrates that you're ahead of the curve compared to your counterparts in less forward-thinking organizations. We should, however, admit the times are changing, and that brings me to my second favorite quote. If the rate of change on the outside if the rate of change on the outside exceeds the rate of change on the inside, the end is near. CreditSafe has seen a significant uptick in requests for more sophisticated credit solutions, including custom scorecards and integrated solutions directly into the CRM. Daily, we help international companies such as Coca-Cola and Dell and others achieve efficiencies in their credit process. When considering going digital in your credit department, we should ask the following questions. Are we solving any real problems or existing issues? Are we executing operational excellence? Have we challenged our own existing policies, procedures, or even our current business model? If you've answered no to any of these questions, we should consider the following reasons to go digital in your credit department. To stay competitive. In a world where the customer now has more choice than ever, does your competitor's process provide a more efficient credit application? Has this led to lost revenue? We need to meet the customer demands. And again, where the customer has more choice than ever, are you meeting or exceeding your customer's demands? Reach more customers. The digital age has made it easier to reach potential customers. Is your organization fully capitalizing on this opportunity? We need to be more efficient and effective. How many hours are being wasted on tasks that could be automated? Finally, to stay professional. Not only would a seamless automated process lead to an increased perception of professionalism, it will reduce the number of the instance of human error. I've included this slide to show you some of the software we're able to integrate into. This concludes my part of the presentation, and I will hand back to Phyllis. Thank you very much.
Thank you, Mark.
I'm just going to pass that back to you.
Thank you very much. So with that, I want to be mindful of everyone's time. Mark and I would like to thank you all for joining. If there are any questions, we have about a minute or two. If you want to submit them through the chat to Emagia Corp, we're happy to answer them. And if not, I will pull up the next screen, which has my email address if you want to direct questions directly to us, either the general box or to my Emagia site. We can answer them at another time. So I'll give everyone a second to answer some questions, or excuse me, ask some questions. We have one question that's come in. Do digital credit applications require a lot of IT intervention? No, it's kind of depending upon the services that you want. So if you just want to set up an application or something like that, no, it's minimal IT. If we want to integrate with a third party like CreditSafe, or if you have other features, you want to integrate with your accounts receivable information, it might take a little bit longer, but by and large, minimal IT intervention with a cloud solution. And, I know companies like ours, for example, we try very hard to minimize the time it requires from other people outside the credit department. Any other questions? Well, with that, I don't see any other questions. Again, we'd like to thank you all for joining us. Please, feel free to send us any questions offline or contact us. And with that, have a great morning, great afternoon, great evening, and thank you again. Bye-bye.